Good morning. I'm Brian Curtis.
And I'm Doug Krisner. Here are the stories we're following today.
The next high-profile IPO to hit the market will begin trading tomorrow. Online grocery startup Instacart has been flirting with an IPO for years. The company's based in San Francisco. It's offering to sell 22 million shares, somewhere between $28 and $30 each, a range that it elevated on Friday. More now from Bloomberg's Shonali Basak.
One thing Instacart has on its side so far is the cornerstone investors that it has lined up. Even though the market is watching the story on margins moving forward on Instacart, you do have PepsiCo coming in as an investor into the IPO, as well as cornerstone investors that could take up 60% of the shares. That includes a division of Norges Bank and Dan Sundime's D1 Capital.
Bloomberg's Shonali Basak. If Instacart trades well, it will add some momentum to other listings. Boston-based marketing automation startup Klaviyo is expected to price its listing tomorrow. This is after the company boosted the target for its listing to $557 million.
Well, we are hearing that Disney has held preliminary talks with potential buyers for its Indian streaming and television business. Here's Bloomberg's Ed Ludlow.
They could take the Disney Star property in India and sell it outright, or they could do more of a piecemeal approach where they take the sporting rights that are India-based and the Disney Hotstar regionalized streaming platform, put them in combination. And it's interesting because one of the parties in talks, according to Bloomberg sources, is Mukesh Ambani's Reliance Industries. That goes back to Disney losing the rights to the Indian Premier League cricket in that nation. Where did those rights go? They went to a JV between Mukesh Ambani's Reliance and also Paramount.
That is Bloomberg's Ed Ludlow. Now, according to Bloomberg sources, discussions are ongoing and Disney could decide to hold on to these assets for longer. Now, Ed referred to billionaire Mukesh Ambani's Reliance Industries, obviously identified as another potential buyer. A spokesperson for Reliance said the company evaluates various opportunities on an ongoing basis and will make required disclosures when necessary. A representative for Disney declined to comment. Brian?
The top executives at Mercedes-Benz are calling for open markets as tensions between China and the West grow. Mercedes CEO Ola Källenius said that the auto industry is reliant on global supply chains. And as such, measures to decouple from China pose a risk to healthy competition in the sector. Here's Källenius speaking earlier to Bloomberg.
And I think we learned a thing in the pandemic, that supply chains can be fragile. It would be a complete illusion to think that we can divide the world, the automotive world, into individual regions that have nothing to do with each other. These supply chains, or supply networks rather, are much too sophisticated.
Mercedes CEO Ola Källenius. His comments came as the European Union opened an investigation into Chinese subsidies for electric vehicles. The European probe is set to take some 9 months. It may ultimately lead to import tariffs on Chinese vehicles.
Well, China's central bank says it will boost efforts to stabilize trade and improve the business environment for foreign companies. The story from Bloomberg's Bonnie Yao in Hong Kong.
PBOC Governor Pan Gongsheng met with various foreign firms including JP Morgan, HSBC and Tesla. He said the PBOC would optimize the working environment for overseas companies. Confidence among foreign firms in China has weakened due to geopolitical tensions and a struggling economy. There are also concerns about the clarity of regulation. Pan pledged to improve the quality and efficiency of financial services and help create a business-friendly environment. No specifics were given. In Hong Kong, I'm Bonnie Au, Bloomberg Radio.
Alibaba has announced some plans to invest $2 billion in Turkey. Bloomberg's Joanne Wong has that story from Hong Kong.
The announcement came after Alibaba President Michael Evans met with Turkish President Recep Tayyip Erdogan. No detailed information about the investment was mentioned, but Evans said the plan is for what he called the coming period. He said the company has confidence in Turkey's economic fundamentals. A statement said Turkey has the potential to become one of the world's leading e-export countries. Alibaba has already invested $1.4 billion in the country through its Turkish e-commerce unit Trendyol. In Hong Kong, I'm Joanne Wong, Bloomberg Radio.
Doug, it's not the type of story that would move the stock a lot. And indeed, the ADRs for Alibaba were flat for the session. A tough day yesterday here in Hong Kong. In that session, Alibaba traded down 2.4%. It has been a difficult period for Chinese stocks listed in Hong Kong. We did have a little pop in Chinese shares onshore yesterday with the CSI 300 up 0.5%. But the mood has not been particularly good.
I thought it was interesting, too, that we learned today, Brian, that China's holdings of U.S. Treasuries down in the month of July for a fourth straight month. You and I were talking earlier about the possibility that some of this reduction has to do with the efforts on the part of Chinese authorities to actually defend the currency, the yuan, against a lot of its recent weakness.
Yeah, I think that's one of these things where you don't know exactly what's happening, whether some of these securities are maturing and not being reinvested, or whether or not they're actually selling. And if they're selling, what are they using that funding for? And then they have so many other ways of generating funding as well. So we don't know if it's a direct plug-in on the currency, but suffice it to say, they have been, rather than trying to weaken the currency, they have been trying to support the currency and keep it from weakening more dramatically because all the implications that it has for capital flight and such. So it's a pretty complicated mosaic.
Yeah, and it comes on a day when we heard from Treasury Secretary Janet Yellen. She was speaking at the Clinton Global Initiative today, saying the U.S. needs to de-risk but not decouple from China.
Yep, that's a very interesting story. So we look at that. We've got our guest coming up, Lisa Erickson, in a few moments, Senior Vice President, Head of Public Markets at CFA. And we'll be talking a little bit about the Fed, too. Hawkish pause expected there by the Fed. That would appear to be priced in. As you correctly pointed out earlier, the dot plots will get a lot of attention and what the projections are for any cuts that could be expected next year. Now it's time for Global News. A U.S. congressional stopgap funding bill is on the table and could come to a vote this week. Ed Baxter has global news from the 960 newsroom in San Francisco. Ed?
Yeah, but will it or won't it get through? The smart money is on won't now, Brian. Speaker Kevin McCarthy says he wants a vote on Thursday. Bloomberg's Stephen Dennis says it cobbles together the right wing of the party and some moderates, and
it's basically already fallen apart. One of the things that is going to be a continuing theme as we go through this big shutdown drama this time is he only has the narrowest of majorities. So if he has anytime 5 House Republicans raise their hand and say they won't vote for something and the Democrats are going to oppose it, then it ain't happening.
Eventually, he says any agreement will have to bring Democrats into the mix, and something will have to be passed by the Senate as well. Another problem with the bill is a lack of any funding for Ukraine. Republican reasoning for this is aimed at the Biden administration. Senator Ted Cruz on Bloomberg's Balance of Power says Biden screwed up the war effort from the get-go.
Listen, I think it is in the United States' interest for Russia to lose this war, for Putin to lose this war. But I also think the Biden administration has screwed this up almost from the get-go.
Ooh, he used the same terminology. And this comes when Ukraine's Volodymyr Zelensky is coming to the U.S. to attend the UN General Assembly and to visit with members of Congress at the White House. So it looks as if any aid for Ukraine will come in a supplemental package. Meanwhile, arguments at The Hague today, where Russia's legal representatives are trying to get the genocide allegations by Ukraine tossed out of the International Court of Justice. A Russian ambassador, Gennady Kuzmin, argues any Ukraine arguments are definite stretch.
That Ukraine's claim in itself and its tactics in these proceedings is a manifest disregard of the proper administration of justice and constitutes an abuse of process.
Ukraine addresses the judges tomorrow. The Americans held in Iran have been released by the prisoner for money swap. The Secretary of State, U.S., Antony Blinken, has spoken with the detainees today after their release.
I spoke to them after they landed in Doha. I can tell you that it was, for them, for me, an emotional conversation.
And he says a relationship with Iran is very difficult. China has flown in a record number of warplanes around Taiwan. This an apparent show of displeasure over visits by a pair of American officials today. Taiwan saying it poses a serious challenge to security across the strait. Elon Musk has held discussion with Israeli Prime Minister Benjamin Netanyahu today regarding feelings that Musk has not done enough with X to stop anti-Semitism. Netanyahu is saying there has to be a way to protect First Amendment rights while curbing hate speech. Musk then responding,
obviously, I'm against anti-Semitism. I'm against really anything that is, that promotes hate and conflict.
Although the hate remains on the platform. Global News, powered by more than 2,700 journalists and analysts in over 120 countries. In San Francisco, I'm Ed Baxter, and this is Bloomberg.
This is Bloomberg Daybreak Asia. I'm Brian Curtis, along with Rashad Salama. We are both here in our Hong Kong studios, and our guest is Lisa Erickson, who is Senior Vice President and Head of Global Markets at U.S. Bank Wealth Management Group. Thank you very much, Lisa, for being with us. You probably heard us chatting just a few moments ago about what's expected from the Fed, a hawkish pause. I suppose that's pretty much priced in. So your views on that and whether or not you think there's any excitement coming this week.
To your point, Brian, there is a lot of consensus around the rate hike outcome of the Fed, and people are expecting no move, but of course some language to make sure the markets know that they're still committed to that fight against inflation and retain that optionality to raise rates later, certainly if they need to. But I do still think, despite the fact that there's some acknowledgement that that part of the meeting may be less eventful, there is going to be a lot of focus on the SEP, or Summary of Economic Projections, because right now from June, which was the last update, it's really showing that there's 4 potential cuts in 2024 and some very modest growth and inflation and unemployment figures. And I think really one of the big questions is, given the string of growth that we've had recently, does that dot plot in terms of 4 cuts in 2024 potentially move to 3 or 2? And why that could be really interesting is if you look at market expectations really after even this morning, we were seeing that the market was also expecting those 4 cuts in 2024. So if there's really a shift in what the Fed projections come out to be, that could hit certainly the bond markets.
Lisa, just bear with me for a second. We've got a bit of breaking news. It's Instacart. It's pricing its initial public offering. They're selling 22 million shares at $30 per share. That is atop of the range for this online grocer. So we have, of course, September the 19th. The symbol will be CART when it gets going. Lisa, thanks for bearing with us there. I just want to get a sense here of how you're seeing market structures, and it's something, of course, that the Fed will be looking at given quantitative tightening carrying on. And, when the rate cutting cycle is over, they've got to have a long, hard look at their balance sheet, haven't they?
Absolutely. And to your point, when the Fed looks at overall market structures and economic conditions, what they've seen is certainly a more robust market than many would have expected at the beginning of the year. And while we've had some fallback in the stock market in the last several weeks, really the year-to-date gains are still quite impressive and valuations are relatively high. Although not completely broad-based, there's still been some nice movement overall in U.S. equities. And so with that, and to your point, some revival in the IPO market, that is certainly weighing on their minds, along with the higher growth prospects that we've seen come through in the recent economic numbers.
So as long as the QT program continues and we've had private, or should I say corporate bond issuance where it is, we can see that yields are likely to remain elevated and bond prices depressed. And for how long?
The bond market certainly has been pricing in a trajectory of higher rates. And that's really despite the fact that while we've had some good economic momentum, there certainly has been understanding that the Fed is closer to the end of its tightening cycle, having engineered quite a rise through 2022 and earlier this year. That being said, I think, again, just what's going on with the inflation front, even last week we had some hotter than expected CPI and PPI numbers. And again, those string of positive economic surprises really is causing those bond yields to continue to march upward. Now, technically, certainly there's just been a trend and there's not really a lot of resistance in the near term. And so we want to continue to monitor how that's going. To some extent, that rise in the increases in interest rates are doing part of the Fed's work for it. But, they certainly want to remain vigilant, and that could, to your point, have some dampening effect further on bond prices.
In terms of the stock market, we've moved more or less sideways here over the past month. Seasonally, it's a typically weak period. However, there might be some consideration that people are worried about a slowing U.S. consumer. How do you see that?
Certainly, we have gotten in our bottom-up and top-down assessments increasing signs that the consumer, while still strong, is starting to slow down. And so this is something that we'll want to continue to monitor as the economic data comes out. And we do have a little bit of lapse, certainly before third quarter earnings reports come out, but that is a key question as we enter that period.
Lisa, thanks so much for joining us. We appreciate it. Lisa Erickson, Senior Vice President, Head of Public Markets Group at U.S. Bank Wealth Management. This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, Sirius XM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
And I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.